Today we're going to be talking about, is it harder to get a mortgage now than it was 5 years ago? I've been on a couple news programs recently, and one of the questions I get a lot is, well, isn't it hard to get a mortgage? And I'm always like, no, it's really not. Like, we have more loans available than ever. We have more products available. Like, everything's looser than it used to be. But then when you look at what they're looking at, you go, this is why they think it's harder to get a loan. Listen to this. The average rejection rate for mortgage applications increased by 8.6 percentage points to 20.7% in 2024, which is more than double the 2019 rate. So if you're not in the industry and you see that, you go, wow, in 2019, like 10% of people were getting rejected, but in 2024, double that. So loans must be harder to get. I don't think that's what's happening here at all. So in this video, we're going to cover what I think is happening, what I am seeing, as well as how you can protect yourself from getting declined when you should get approved. If you're new to the channel, I've been a loan officer for the last 18 years. My team's one of the top purchase teams in America. We're here to help you everywhere, so please reach out, 786-933-2077. Look, I say this at the beginning of all of my videos because I do want to be your mortgage lender. Okay, what's going on? Is it harder to get a loan? No. I mean, here's the thing. Seriously, we really have more loan products. Guidelines are looser. Like, if I look at my own guidelines, like 2019 to now, it's like night and day. It's so much easier. So why are there so many higher rejections? Technology. Technology, guys. It's technology and lack of education. It is those two things. And it's not you, it's the mortgage industry. So what's the big shift from 2019 to now? Well, you have more and more lenders where you guys are filling out online applications and the software is issuing automatic denials. That's right. If you're not meeting certain buckets, like a credit bucket, they are sending out these denials where it's like, oh, your credit score is too low. Go work on your credit score. And you're like, oh, I got declined. Whereas my team, every single application we get, a loan officer reviews. We review the application for a few things. Number one, we want to know if it's accurate. That's the thing. People are getting declined because their debt to income is too high, but we talk to them and we're like, hey, like, is this right? Oh no, I must not have typed in the number correctly. That's the thing. Right now, there's a lot of companies that are gauging whether or not they should call you back based on the online application that you filled out. You might have hit a button by mistake that gave an answer that made it you were a decline, but if someone had spent 5 minutes talking to you, they would have realized you're an approve. And that is what myself and my team are seeing so much of. You know, we keep on hearing, yeah, I applied with 10 people. You're the only one that called me. What? Look, you got two things going on. You've got technology that's saying this isn't a great file, and you've got loan officers where the way they get paid is they get paid based off of how many yeses. So unless you're an automatic yes that they can easily see, they're gonna go after the automatic yeses and just kick you to the curb. That's wrong. It's so wrong. And look, I'm a businesswoman, and as a businesswoman, I look at all of this and I'm like, oh my gosh, like the amount of people being declined for mortgages who actually qualify or could do a few things and then they would qualify in 6 months, my guess would be it's probably close to 10%, right? Like, here's the thing. Mortgages in terms of qualifying hasn't changed that much between 2019 and 2024. And people go, oh, well, debt's so much higher, this and that. No, I really think it's because loan applications are being denied because nobody's looking at them. So as a potential home buyer, before you fill out any application, actually, if you're a homeowner, because refinances are even higher, refinance decline rates 25.6 in 2024 based on what I was reading. Make sure that before you fill out an application that you're talking to whoever the loan officer is going to be or their team. It's like, if you guys call that number, the 786-933-2077, talk to Sandy and Alyssa, they'll answer your questions. You fill out the application. Even if your credit is 420, we are going to call you, right? Jen, Sam, Linda, Christina, Amber, someone's going to call you and be like, hey, this is what we saw. Like, what about this or that? And we're going to give you steps to get to the finish line, because that's what it should be. It should be, if you're not approvable now, we tell you how to get there. Simple, right? But that's not what the industry is doing. And it's the reason I wanted to do this video, is because the problem is, you get statistics like this. People who aren't in the industry look at it and they go, oh, it's because loans are harder. But I'm sitting here watching this all go on going, no, it's because real people aren't looking at these applications. Because as a real person, I've seen so many applications where it's like, they put in their monthly income instead of their yearly income. Well, of course it makes it look like they make no money, right? Like, monthly versus yearly is different, but the way some of these applications are worded, it doesn't make sense, okay? So number one way to make sure you don't get denied when you should be approved is make sure you're working with a team that's actually going to look at your application, okay? Don't blindly fill out loan apps. A lot of times I feel like people think that a loan application is like a scratcher ticket, and they're just like, I'm just gonna fill out 20 and see what comes back. No, this is the biggest financial decision of your life. You need to make sure you're working with a legit loan officer that's going to actually look at your application and not just let the computer decline you because you checked a box wrong. Okay, what else? Why else do I think it can't just be the computer's fault? No. There's also a lot of loan officers that don't know their guidelines at all. We see a good amount of that. Because of YouTube, I'll get a call. Always feel free to call me, guys. If you got declined, reach out for sure. Because you may not be a decline. Tell us what happened. Tell us what they said. We'll look at it. 786-933-2077. But a lot of times we talk to someone and we're like, oh, so yeah, yeah, okay. Do your app, we get their app. Okay, I need this, and this. Yeah, okay. Approved. It was just structuring. That's the thing. People don't realize this. People think that with a loan that either you're going to get it or you're not. The loan officer doesn't matter. What they don't understand is that the guidelines for mortgage lending are like Alice in Wonderland. What's up is down. What's down is up. You have to know how to please the queen, right? The underwriters are the queen. You don't want to end up having to paint the roses red. So you definitely need to make sure you know your guidelines. And people assume, oh, well, loan officers, to have that license, you're educated. Guys, the education that you get to become a loan officer has nothing to do with the loans. It's actually, it's mind-blowing to me. It's mind-blowing to me that we have people get their licenses to be loan officers, but it's just based off of federal regulations and rules, very little teaching them how a loan works, how to actually do a loan, and how to get a loan through the system. Sometimes you have loan officers where maybe they actually knew how to get it through the system, but they just aren't responsive. The underwriter asks them a question, they don't respond for 3 weeks. You're like, oh, what's happening? You have a loan officer that's asleep at the wheel, or it's a part-time job. You want to make sure that who you're working with has a proven track record. Google reviews are your best friend. If you look up the loan officer or the loan officer team and you don't see any reviews, why are you working with them? That's the thing. A lot of times people go, oh, well, I'm going to use this nameless, faceless corporation that I saw online in a TikTok ad that said, low rates, we're doing low rates. Like, I don't know, is that TikTok dancing? It felt more like a seizure, but anyways, they're like, well, because it's going to be cheaper. Here's the funny thing. You can work with one of the top lenders in the country, and often it is cheaper than a loan officer with no experience. I don't know if you can see this in the camera, right? We see this all the time. We see this all the time because we're always like, hey, let us see your loan estimate. We'll see if you're getting a good deal. And I'll look up the loan officer. I'm like, they got their license, a month ago, and they're charging you 2 points. We can do the same deal for no points. You're basically paying on a $100,000 loan, $2,000 to work with someone that doesn't know what they're doing. You're paying more to work with a newbie. You're paying more to work with someone that doesn't know guidelines. You may be like, how is that even legal? I don't know. I don't know. It's one of those professions where you're really not paid based on your skill or expertise. You're paid off of whatever you can convince the client to pay you. No joke, seriously. And look, my business model is volume-based. I say it all the time. I am the Costco of lending. I like to say our service is more Nordstrom's back in the day. I don't think they have like what they used to, but you know, we do a lot of loans, and that way we're able to offer better deals to our clients because we're not having to live off of 1 or 2 deals a month. So here's the deal. Do I think it's harder to get a loan in 2025? Absolutely not. Do I think it was harder to get a loan in 2024? Absolutely not. Do I have serious concerns about computers declining people based off of boxes? Yes. Do I have serious concerns that humans are not reviewing these applications? Yes. Because here's the thing. With what I'm seeing, if humans are reviewing these applications and issuing these denials, they have no idea what they're doing. And I don't believe that is happening at a large scale. That would be too shocking for the industry. Do I believe there could be code where it's like, oh, you applied for this, but it doesn't work. Beep, boop, bop, boop. Decline? Yeah, totally. Because they're trying to figure out how to maximize the output of every employee. And if you're not going to be an automatic yes, then putting more time into you costs money. But the funniest part is that you probably are an automatic yes. You just hit a box wrong. So overall, I don't think loans are harder to get. I think people are being declined because of technology and loan officers that don't know their guidelines. So questions, comments, as always, feel free to reach out. If you guys got declined and want a second opinion, give us a call. You know, sometimes we're going to be like, yeah, you really don't qualify, do this, this, and that. Or we'll be like, what? And we'll get you in the house. Feel free to reach out. Thanks, guys.